From the trading desk of dailyforex.com, this is Christopher Lewis looking at the Aussie dollar pair after a very negative Friday, non-farm payroll Friday for that matter. And the United States added 115,000 jobs in the month of April to disappoint the market. The Aussie is an interesting pair because I have suggested here recently that we may have been forming a bearish flag. As you can see, as I draw this, you can see that that pattern is there. It's a bit of a choppy pull, but nonetheless, it was all telling the same thing, that it looked very weak. My cutoff point, my spot that I wanted to see broken down below was the 102, which also would have included the 50% Fibonacci retrace. We are now below the 200-day moving average and well below it, and it does look like we're going to reach for lower levels. China's slowing down. Australia provides most of the raw materials for China. So when you lose your biggest customer, things aren't good. The Australian the Reserve Bank of Australia, the RBA, the central bank in Australia, has recently cut rates by a surprise 50 basis points, and perhaps there was a little more to it than we realized. The breaking down of this flag does suggest that we are going to go much lower, and actually, based upon the measurement, it would suggest that we are coming back here to retrace the entire move. Nonetheless, I will be looking to sell this currency pair now because we closed at the very bottom of the range, which very rarely gets reversed right away. That almost always means that there's going to be some type of follow through. With this being said, rallies could be sold as well, especially as long as we can stay underneath the bottom trend line of this bearish flag. One has to think that maybe there's something to this pattern and we could see a severe falling. Parity will more than likely create some type of reaction just because of the large round psychological number, but there is nothing in this chart currently that makes me bullish.